big bad
Hey
John.
y'all, my name is John Mitchell. I'm a certified financial coach. The purpose of this video and this YouTube channel is to teach you how to master the personal finance basics. In today's video, we're going to be discussing how much dividend income my $43,000 portfolio made in the month of October. Through budgeting, I learned that cash flow is king. By owning assets that generate you cash flow, you could theoretically retire whenever you want. With the goal of retiring off of dividends in the future, that means I need to have enough dividend cash flow that is more than my average expenses every single month, and a little extra play money too. Currently, my expenses average about $6,500 every single month, so I've set the goal of earning $10,000 in dividend income. Jumping into my stock portfolio, here is my overview sheet. This is the front one here, and it shows all the basic stock information. It's got my taxable brokerage on the top, followed by my Roth IRA, and last but not least, my kids' Uniform Gift to Minors Act, or UTMA. The next sheet is our income sheet. On this sheet, we have all the stocks, or all the dividend income and interest for our cash account we've been making every single month. And then last but not least, we have the data and journey to retirements sheets. These sheets, with a couple assumptions, portray how much dividend income I suspect we'll make in the future. So jumping back over to our portfolio overview sheet to kind of give you an update on what's happened since then. First, for all of those who are new here, to explain our yield CB, I finally changed this now in our yield. So the reason why I have two yield columns, the yield CB is based off cost basis. What I wanted to be able to do is show how much my stocks are really yielding based on how much I paid for them months or years ago, and then how much they're yielding based off their prices today. So that's why those are there. Really nothing crazy to report in the taxable brokerage account in regards to really stock movement. It's just your usual fluctuations based off the year. For those who are wondering why I have so much cash on hand, so the FZFXX is like the Fidelity, what is it like? It's a special cash account that kind of vested a little bit. It's more like a money market account. So I do run the risk of losing this money, theoretically, but I'm not worried about it. I'm all in on it, and it's yielding about double the regular cash account. So that I'm taking that risk, and that's why that's there. Sorry, long story short, the money's there because I thought with the government shutdown that's been going on for a month now, I thought I might need the cash on hand to jump into stocks because I thought people would feel nervous and stock prices would go down. So that's why I was holding out. I sold the Truist and Amazon stocks there, I think in September. So that's also where most of that cash came from. Assuming nothing happens in the next week or two in regards to the shutdown, I'll just distribute that, or about 8% of that cash into current holdings I have right now. Jumping down to the Roth IRA, mostly nothing to report. However, something to talk about that's annoying for now, but we'll fix it in the future. So first and foremost, again, look, if we go to these yields, we can see that my I gotta fix that too. Sorry, I forgot. My cost basis yield, which is this column, this is my cost basis yield, is at 3.814%, and then my yield from if I bought all these stocks today is 4.091%. Obviously, the goal is I want all my stocks that I buy in the past to yield more than if I could buy them today. That's the goal, and I know it won't always be that way, but I'd like at least the average, which that's what this is. I'd like the average to be there, and we're not there right now. So, of course, by having this tracker, I can dive into why I'm seeing this. And if we look at Robert Half, this is our biggest offender. We can see that my current yield is 4.067%. And then my the yield if I bought the stocks today would be 9%. Whoa, that's really different. That's really big. What happened there? So if we look, Robert Half is currently trading at $26.19. And if we look at what I bought it at, I bought it earlier this year at $58.03. So I owe you all a dive in as to what happened next month. And, if I still have the stock, which I think I still will. But what happened, because depending on how that analysis goes, I might double down and buy more of it. Or I'll hop out of this position. I'll let y'all know next month. Last but not least is X-Ray. So this pretty much went bad on me as soon as I bought it. I bought it at the beginning of this year, and it went down in April during the tariff stuff and really hasn't bounced back yet. So that's a known one I've had that's been down. And believe it or not, those two stocks are the ones that are keeping my overall yield down. So if we go to my portfolio total yield, I'm at 4.695%, whereas my yield based off of if I bought everything today is 4.7. So I mean, yeah, it's pretty darn close, but I do want that number to be better. Last but not least, the kiddos portfolio, nothing crazy action there. He has SCHD now. I talked to a couple of friends about my logic was I want it to be low maintenance and stuff like that. But if my yield is currently 4.695% and he's yielding 3.821%, and I want to be able to grow him this asset in the future, I'm stupid to not mirror my portfolio. So I'll have that changed for next week when I get some, free time from work. If you have not already, like and subscribe to this video as it helps me see what content you all like and want to see in the future. Jumping over to our income sheet, this is our best month of dividend income this year. As you can see in the L column October, we got paid by a lot of people, which is what we like to see. The newest addition to the portfolio is Allstate Primary Shares I. They paid out this month, followed by pretty much everybody else. You can kind of go through and see those there. Our total dividends for this month, including interest, that's this column at the bottom there is that interest. Our total money or in cash flow for this month, it was $113.64. Not too shabby. Again, that's our best month this year, which is awesome. Our all-time income for our taxable brokerage account is $559.39. If we jump down to the Roth IRA, we can see that this second best total income made for the Roth IRA for this month. We made $53.28. If you're wondering why I had Allstate, the primary shares I in both, this is the only company I have in both, is because I wanted to share some of it. It's got a really nice yield. I think it's a little over 5% off the top of my head. I wanted to share some of that yield in the Roth IRA as well as have it up in the taxable account as well. So I split it. I have half my shares in the Roth, half my shares in the taxable account. So again, like I said, we made $53.28 for the month. And then for the year, we have yielded $419.56 of tax-free dividends, which is pretty awesome. Last but not least, our portfolio. For the month, we made $166.92. Again, our best month of the year, for a total of $978.95. Cross my fingers. I think we will cross that $1,000 income for the year mark next month. So pretty excited for that. If we get down to the kiddo, he had 13 cents in interest. Nothing crazy there. Again, SCHD paid at the end of quarter three. So beginning of quarter four, excuse me. So I don't expect him to pay any more the rest of this year. If we jump over to our data sheet to close this sucker out, we can see that currently our account value is this much. This doesn't include the kids' account, by the way. Just over $43,000 with a yield of 4.695%. Our average dividend per month is $97.90 with expected annual dividend income of $1,174. So our dividend growth is 10%, is an approximation we got from the book Get Rich with Dividends, which is my source for building this portfolio in the first place. The assumption I have is that most of the stocks I had a dividend growth of 10%. I'd love to get a more accurate number in the future, but this is just the one I'm using for planning factors right now. And if we scroll all the way down to, where is it? Here it is, 21 years. 21 years from now, if I only reinvest my dividends and invest no extra money on top, that's how long I'll have to wait, but maintain until I live off the dividend income that I make. I hope you got something out of today's video. I love being able to show you that even I can make mistakes or miss things on my portfolio. And we got to see today that Robert Half is underperforming for me, mostly in stock value. So I owe you all at a bare minimum an analysis of Robert Half, what's happened over this year and whether I plan to take my loss now and take that tax loss for the year, or if I want to double down on my position and take advantage of that really sweet yield that it's got at the moment. I did see it does plan to hold its 59 cent per share dividend through December. So through the rest of this quarter, it'll hold that, which is a good sign, I hope. But I do owe y'all better analysis as we go forward in the future. If you're looking for a financial coach to help you better understand dividend stocks, sign up for our free appointment today with the link in the calendar or hit the pinned comment in my description down below. I love each and every one of you, and I'll see y'all in the next video.